Welcome to Financial Strategies with Andrew Agemy in Connecticut and Daniel Agemy in Colorado.
George is sitting on his couch and he's listening to some awesome financial programming. He's watching the TV. George just got a buyout from his company, early retirement, you might call it. And he's watching the financial news program to find out how he should invest his money because now he can retire.
Yeah, and then while he's doing that, he sees the next hottest tip the talking heads are talking about. He jumps on his computer and buys it. Well, is George an investor or is George a speculator? I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today we're talking about, are you a speculator or investor? And AAA, I think that this is one of the most misunderstood things. We hear all these tips, we listen to different financial programming, all these types of things. But you really need to know if you are an investor or you're a speculator. You need to know the difference. And whichever you are is fine. The difficulty that you and I see is a lot of people come into our office, prospects come into our office, people who want financial education come in and they think they're one thing and they're investing the other way. And so we want to help people understand which are you and are you set up that way, because you need to know. And I think it's more confusing today, investing in speculation, than it ever has been.
Exactly, Daniel. That's what I'm always going back to, and it's talking about how we need to understand the definition of the words that we use, right? So many times we're using words, but anybody who's listening to our show knows that the old situation of the 15, 16-year-old's definition of done compared to that parent's definition of done. They're two different things. They're using the same words, but they mean two different things. And so in the same way, we need to define things like speculator and investor, because people think they're investors when they're actually speculators. And it's really interesting how that goes. And people don't know what they don't know. And that's why we exist. That's why Financial Strategies with Andrew and Daniel exists, right? Because people don't know what they don't know. We're trying to educate. We educate thousands of people a year between the 6 different radio stations that we're on and our podcasts, as well as workshops and webinars and seminars and such that we do. But we're all about education. And so I'm excited about today's show, Daniel, when we're talking about these two between speculator and investor. And I think maybe we should just dive in and start with the definition of those. What do you think?
Yeah, absolutely. Absolutely. There's all different types of definitions, right? You could look it up on Investopedia. You could look what Fidelity says. You could look what BlackRock says. You could ask your financial advisor what it is. There's all different types of things, but you and I like to use a really simple term.
Right.
If you don't know, if there's no promise of return, you're speculating. And if the investment you're investing in is going to pay you, then it would be an investment, right?
Right.
So for example, if you bought a piece of land and you said, I think that in 20 years, this piece of land will be more valuable, and you let it sit there for 20 years, it's got a fee, right? You're paying property tax on that land. So there's some carry cost. It's costing you something, and you're hoping that in the future, it will be worth more. That's a speculation. Now, if you buy a piece of land and you rent it out to a farmer, and the farmer is growing crops, and you have a contract that the farmer is going to pay you X amount of money every month or every year, and you know that's coming in. Now you just turned into an investor because you're getting paid. Now your land could still go up. You could still get the speculation part. You could still get the appreciation part, but it doesn't matter to you if you get that or not, because you're an investor. You're getting paid for your land.
Right. Right, exactly. Huge difference, right? I like your illustration, Daniel. I'm just going to chime in a little bit to use real estate again in a little bit different way. And speculation would be kind of like what people are doing with the flipping houses. And if you don't know what you're doing, if you know what you're doing with flipping houses, you can make some good money. But if you don't know what you're doing, you can lose a lot of good money because of speculation, right?
Right.
And for those people that know what they're doing with flipping houses, it's not so much speculation as it is for those people who say, oh, I think I'm going to flip a house. And they go and they buy a house and they don't know what they don't know. And they end up losing money on the deal, right? As opposed to those people that go out and buy a house and they just rent it out, where it's a 2-family house or a 3-family house, right? And they rent it out and they have those rents coming in every month to help them pay the mortgage and to actually get some money, net some money from that investment. They're getting paid on it. And when it comes to the analogies that we often use, it's like the difference. Speculation is kind of like roosters to a certain extent, and versus chicken. And in retirement, you need to eat. And if you invest in only roosters, and you have to kill some roosters, so you might run out of money. But if you invest in chickens and you only eat the eggs, well, you're going to be able to eat for the rest of your life. And that's key to be able to understand that. And so you need to be able to understand what a speculator is, what an investor is, which one you are, and make sure that what you are is congruent with what you want to be.
Right. Right.
Right. Now, if you just joined us, you listen to Financial Strategies with Andrew and Daniel Agemy. Today's topic is speculator. Are you a speculator or an investor? And we have a paper to go along with today's show that helps people be able to understand this. It's a paper called TR equals I plus G. And this is a great thing. It's a formula for successful retirement. TR, total return, equals income plus growth, right? And it's much like the aspect of the speculator versus the investor, but it helps be able to understand how these two come together to help you be able to retire and stay retired. And we love to put this in your hand. Call us at 800-725-7616 for your free copy, no obligation, 800-725-7616. Ask for it by name, TR equals I plus G paper. All right. You listen to Financial Strategies, Andrew Daniel Agemy, because people don't know what people don't know. Today's topic, are you a speculator or investor? So, Daniel, we got these two different types, right? So, like you said, depending who you do, the investor is somebody that's being able to get money, actually make money. And what was the definition that you spoke about a moment ago regarding the speculator?
Well, it's the opposite, right? So if you are an investor, you're getting paid. And if you're speculating, you're hoping that you're going to get some type of return. Now, I like what you're saying here about there's hot tips and there's people who are professional speculators, and you just need to know that. So the house flipper is a professional speculator, but they have some inside knowledge and they're doing it, right? So if we go back to our good friend George at the beginning of the story, sitting on his couch, he's very excited that his company just gave him an early retirement. And he's going to get a lump sum of money. He has the ability to take this lump sum of money. They're going to pay him to retire, and he can retire. Now, if he listens to these financial programs, these large financial media programs, right, they tend to gear themselves towards entertainment and speculation. And they don't present it that way. They present it as investing. And so you can get tripped up. So I've heard plenty of times where they say, oh, this company beat their earnings. You need to get on board. You need to own this. And they probably, number one, already own it. And you're going to jump in and give them what's called liquidity so they can get out. But two, they're not talking about holding this for 5 years. They're talking about holding it till next Tuesday, typically. Right?
Right.
And if something changes, they're going to get out and they're not going to tell you. Right? They're not going to say, hey, I got out of this one. So you need to be very careful when you listen to that. So George listened to that. He hopped onto the hot new stock, but he doesn't know a single thing about what he's doing. That's a speculation. And that's the worst type of speculation because he doesn't know the fundamentals and he doesn't know when to get out. He's listening to a hot tip that he heard. Yeah. Whereas your example with the real estate investor who is a professional house flipper, they're a professional speculator. So they know they're a speculator and they know they're good at speculating and they're okay with that. And that's why we're saying you have to define it. So if you're flipping houses and you think it's an investment and you don't know what you're doing, you're probably going to lose money. And you might think you're an investor when you're speculating. Whereas that professional house flipper understands they're a speculator, but they understand speculation. So they're lined up. And that's why we're saying you can't think you're an investor and speculate or think you're a speculator and invest. Because it will mess you up. So that the professional house flipper thinks they're flipping houses and speculating, but they're renting it and they're collecting $1,000 a month in rent. They're like, I thought I was going to make $30,000, $50,000, $200,000 on this deal, and I'm making $1,000 a month. They're not going to be happy either. So that's why it really has to be your understanding which you are, and hopefully we can define that a little bit better throughout this show.
Yeah, exactly. And part of that whole thing is the aspect of diversification, right? It's you may have part of your money in speculation, and you might have part of your money as an investor. But the big problem is, especially if you're planning for retirement and you have all your money or most of your money in speculation, that's a huge mistake. And especially if you have too much money in speculation, it's a huge mistake. Too much money in one stock is, a big mistake. And the biggest fear of retirees is to run out of money before they run out of life. And the biggest reason they do that is because they don't invest properly when they retire. Because when you retire, you have to invest differently than before you retire. You're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is, are you a speculator or an investor? And we're glad to have you with us today. And we have a lot more to come with this. But we have a book that we'd love to give you before we go to break. And it's called More Life Than Money by our friend Anthony Saccaro. And Anthony has a bunch of alphabets after his name. And he's an attorney as well. Anthony's done a great job with writing this book to be able to help you to know what you don't know about things. I think the book should be called All the Things That You Don't Know About Retirement But Should Know. But nevertheless, it's a great book. You can have it for free by calling us at 800-725-7616, 800-725-7616 for your free copy. To the next 5 first-time callers, or if you're a client, please call. We want to be able to educate you further. 800-725-7616. We'll be right back after this.
Do you have any questions for me about retirement income source?
I just want to make sure I can invest well enough to have enough income, enjoy my retirement.
We build a custom retirement plan based around your income and goals.
How do I know I can trust you?
Building trust does take time, but our investment advisory arm is comprised of fiduciaries, which means our obligation is to you, so you can enjoy your retirement with a little more income stability.
I'm in.
That's 2 out of 3.
This is Financial Strategies with Andrew and Daniel Agemy.
So let's visit our friend George, who's been sitting on the couch. It's 6 months later. He's still sitting on the couch watching the same shows. But unfortunately, he's like wringing his neck, and he's wanting to know what to do next, because that stock that he bought 6 months ago, that was such beautiful, wonderful stock at the time, according to the talking heads on TV, has been in the toilet, so to speak, since he bought that. And he's just wanting to know what to do. He's retired now. He accepted the package, and he gets a phone call from his friend Betty, Betty's talking about, what are you talking about, George? I mean, I'm making $70,000 a year for my investments. They just keep paying. They kind of like to say, not really fancy, not really sexy, but you know what? I get a check. I get a check all the time, right? $70,000 a year. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today we're talking about, are you a speculator or an investor? And this is really important self-assessment to know, are you an investor or are you a speculator? And then after you figure that out, are your funds set up, or your retirement funds set up for speculation or investment? And AAA, I love that contract between George and Betty, because it's an example of 2 different ways of investing, right? You've got a hope strategy where you're hoping you're going to hit the next hot thing and ride it up. We hear all the time, right? Well, I need more money for retirement, so we better invest more aggressively. And more risk does not equal more return.
That's right.
If it did, it wouldn't be more risk. So speculation does not always equal more return. Sometimes it can equal life-changing returns if you speculate, but you have to do it the right way. You have to understand what you're doing.
Right.
Whereas if you've already accumulated your wealth and you're worth $2-3 million, you're worth $500,000, you've accumulated some wealth, you can speculate it all and hope that it turns, your 500 turns into 2.5 million.
Right.
But that's a hope, and that's not really a great strategy if you're near or close to retirement. And that's who we're talking to today. We're talking to people who are near or in retirement. They're thinking about retirement. They want to retire. They can see the retirement. They can taste the retirement, or they're in retirement and they want to protect what they have.
Exactly. Those people with $500,000 plus that they've been able to save from that standpoint. And Danielle, I'm going to correct you because you said we're looking at two different ways of investing, right? But that's the whole point of what we're saying. One's an investment and one's a speculation, right? It's two different things you can do with your money, right? And that's what people will think, Danielle, right? And I know that what you're thinking. It was just a slip of the tongue. I get it, right? But that's the whole point. What we're trying to bring across today is that are you a speculator or are you an investor? Investor is somebody that gets paid. A speculator is somebody that's hoping they're going to make some money, right? And, if your account value is up, you made some money. Well, that looks like you made some money, but you haven't made any money until you actually cash it in. And that's part of the thing with that. Whereas in our story of Betty, and George hasn't cashed it in, but George is actually, his account value is down below, right? And when is it going to be worth something again? Who knows? It's only going to be worth something if the stock goes up. But the stocks go up, stocks go down, stocks go sideways. And George is unhappy. Betty, however, she's an investor. She's getting paid every month, every year. She's getting paid. We don't necessarily care as much about the underlying stock, or the underlying vehicles that she's in, as much as we care about what she's getting. And that's key. Is when you're retired, you need great definition of retirement is having more than enough money to live the rest of your life in the way that you want to live. And that's a great thing. But we're talking about these things when we're talking about the differences, the key differences between speculators and investors are things like the time horizon that they're investing, the risk tolerance, the decision-making process, the expected returns, right? And
exactly.
And
George went through all of those, right? George went through all, like he's sitting on the account. So time horizon is he hasn't even thought about that because he just found out he gets to retire. So there's just like, I want to retire. There's no plan. There's no nothing. And then you've got risk tolerance. That hasn't even crossed his mind either. It's just like these people on TV must know what they're talking about. And if they're saying this is good, I'm going to get in. And then you go into decision making. The decision making was somebody who looks like they know what they're talking about and they're on a platform that makes them sound like they know what they're talking about. Told me to buy this, so I bought it. That was the decision. There was no reading financial statements. Right. There was no cost analysis.
There was no education, right? That's key. You don't have to do the cost analysis and those kinds of things. As long as you got somebody educating you in that so that you can make a smart decision with that information, right? People in our listening audience, you're all smart people in your own areas of expertise. And you're probably listening to the show because you don't necessarily have financial background. And I get that. And that's fine, right? Because I used to work on my own cars all the time. I was a mechanic at one point in my life. Today, I don't even change the oil in my cars anymore because they scare me, because they're not anything like they used to be. I mean, I buy old cars and I work on the old cars, right? I build those. But the point is that I don't have that expertise. My sons have that expertise of the management of automobiles and technology from that standpoint. And so I depend upon them for help with that and other professionals. But in the same way, you guys are all talked with an attorney the other day, very smart lady. She's getting ready to retire, but she has no clue really, doesn't know what she doesn't know in regard to what's going on to her finances. And that's fine. She gave us a call. She's a listener, and we're glad to be able to educate listeners further on a one-to-one basis offline if need be, or answering those questions online from that standpoint as well. And I just see that time is flying by right at the moment. So let me just identify ourselves. You're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. Today's topic is, are you a speculator or are you an investor? There is a difference between the two. Well, we're giving away a paper to be able to help you understand some of those differences. It's called TR equals I plus D. Total return equals income and growth. So whatever your total return is coming from whatever you get in interest and dividends, and plus whatever you get in growth and or loss, depending what is the case in your situation. Love to put this in your hand. It's only a few pages. It will help educate you. I think you enjoy it. Call us at 800-725-7616 for your free copy. No obligation. 800-725-7616 for your free copy of TR equals I plus G. Call now. Daniel, as we're talking about
AAA, I just want to say I highly recommend people grab that paper if they haven't got it already. I think that is a very good paper, and it's not brain science. It's not astrophysics. It's not anything crazy. What it is common sense that you forget about. If somebody reads a book, you read a really good book that has a lot of common sense stuff that is not like, wow, I never thought. It's just I haven't thought about this in a long time. I haven't put it together in that phrase, right? And you're like, wow, that was really good. That's amazing. I'm glad I read that. It's that kind of thing. It's nothing crazy, but it's going to make you think, and you're going to say, oh, and it might help something click. So I think that TR equals I plus G white paper is something anybody in retirement or thinking about retirement should grab and check out. Even if you're not, it can help you understand what we're talking about a little bit better.
Easily, simply, right, without a lot of effort, right. Don't have to be afraid of it. You listen to Financial Strategies with Daniel and Andrew Agemy, this father and son team, bringing to you today's topic of, are you a speculator or an investor? All right. So, as we move into this, right, Daniel, the time horizon, you talked about George having, was a short time horizon and didn't take that in consideration, didn't take in consideration risk. The decision-making process is where we stopped, right? He wasn't getting the right education. He was just hearing some talking heads and decided to pull the trigger on something that, in this example, didn't do him very well. And he was expecting that the fourth thing is expected returns. He was expecting to get a lot of return, right?
A lot. That's all, right?
But how many times does that happen? You expect a lot and it goes the other direction. How many times, it'd be interesting if there's a way for us to be able to understand how many times somebody tried to flip a house and they lost more than what they got out of the deal. That'd be interesting if we could find that out, right?
AAA, how many meetings have you been in? How many meetings have you been in? And there's a husband and wife sitting there, and they kind of do their own things with their money. And he's saying to you, Andrew, we got to be aggressive. I've got $200,000 of losses that we need to make $200,000 of gains so I can offset the losses. And she's sitting there shaking her head. No, I don't want anything to do with it. She's got no losses. She's got more money because she took the investor approach.
Right.
And he took the speculation approach. He ended up losing 200,000 and now he's trying to recoup those losses. And she went like the turtle and the hare.
Right.
She went with like the turtle and she's winning the race, but she never was aggressive.
Yeah. Right. Slow and steady wins the race, right? And that's a very good point, Daniel. We've been in those situations a lot of time. We see that all the time, right? And that's the point that we're trying to bring across to people. Are you a speculator or are you an investor? And what I want to say is, right, what's the difference between somebody that's playing FanDuel, right, and Robert Kraft, owner of the Patriots, New England Patriots, right? And those people doing FanDuel, they want to make some money. They're speculating, but they have no control over the football. Whereas Robert Kraft, right, he's got control over his football team. He can hire the general manager. He can hire players, fire them, all those kinds of things. The control in this situation makes a difference. Kind of like Warren Buffett. What's different between Warren Buffett and the average person in their 401k plan? Average person in the 401k plan is just throwing money, dumb money as we call it, right? Throwing money at an account at these different mutual funds, doesn't know anything, if they get proxies, they don't know how to vote. Whereas Warren Buffett, he's sitting on the boards of the company that he owns, and he's got say in what's happening with that. So he's not a speculator like the people with the mutual funds.
No, not at all. He's a very good example of an investor because everything he buys has to have some type of return. Now, some people can say, well, he bought Apple. That doesn't have a dividend. Maybe there's some things like that, but he understood how much cash Apple was generating. And so he decided to buy it because even though it wasn't paying it out to him, he saw that their profits were so big. And then you know what else he did? He helped convince them, right? Because he's such a big thing to do buybacks. And so in a way, he was making all these profits drive the price of his stock up as opposed to paying him like the utility companies he buys. They are all paying him, right? So that he does a little bit of both, but it's because he has that control. Absolutely.
Right. But it still wasn't so much speculation to him right? Because he knew what he was doing. He wasn't getting in blindly. Where so many people, how many times do we hear people say, I don't know how to do this? Or you can tell, when somebody is educated and when somebody is not educated, especially when it comes to finances. And that's why we exist on Financial Strategies with Andrew and Daniel Agemy, this father-son team coming to you to help you know what you don't know. Today, we're talking about, are you a speculator or are you an investor? Before we go to break, we've got a book that we'd love to put in your hand by our friend Anthony Siccaro. It's called More Life Than Money, How to Not Outlive Your Savings, right? The greatest fear of retirees is running out of money before they run out of life. Anthony, in this book, masterfully describes ways how you can know what you don't know, and you can be on top of your finances, to educate yourself, to be able to make smart decisions as opposed to decisions by indecision. Love to put this in your hand for free by calling 800-725-7616. If you're a client, please call. There's a great book, recommended highly. We're glad to give you a copy of it. If you're a radio listener, if you first-time callers at 800-725-7616 for your free copy. We'll be right back after this. Call now.
The biggest mistake retirees make is not switching from the growth model to the income model. A good retirement plan is having enough income to last the rest of your life. Any problem in retirement, it can be solved with income. The biggest concern that retirees have is running out of money. The second biggest concern is that they want to grow their money so that they don't run out of money. And they think it's synonymous when it's not necessarily the case. People don't know what they don't know. And they're not going to know unless somebody tells them. People think that the only thing that they can do to grow their money is by investing for growth in the stock market. And it's very much a herd mentality. But you can only get growth when the market goes up. When they invest for income, they're able to get money no matter what happens. I'm Andrew Agemy, founder and CEO of Agemy Financial Strategies. We've been helping people enjoy stress-free retirement for over 30 years.
This is Financial Strategy with Andrew and Daniel Agemy.
When I started in this business over 30 years ago, I came across a man who had been investing. And back as Daniel, when I first started in this business, I was involved in investing in the stock market. It wasn't until 2000 when the market started coming down, and I started saying, "Hey, what happened here? I don't like my clients losing money. Nobody told me the market was going to do this." And I started researching and changed to be able to understand the difference between speculating and investing. So you might say I was trying to convince this guy. We're going to call him Ralph. And Ralph, I was trying to talk to Ralph about becoming a client. He didn't want to become a client because he didn't want to speculate. Because, you see, he had speculated prior to 1987. And then in October of 1987, when the market dropped 25% in one day, he lost a bunch of money, and he pulled the money out because he was speculating when he thought he was investing. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. And today we're talking about, are you a speculator or investor? And AAA, I think that happens a lot. I think that's a wonderful example of the journey people go through. So at the time, Ralph understood that better than you at the time, right?
Right.
And it took you a few years. It took you some time. It took you some school, hard knocks, right?
Yeah. Right. A lot of tuition
to learn that and to get to a point where where you're helping every day. You're helping people who may not understand that to get positioned in a way where they don't have to go through what Ralph or what you went through yourself.
Right. And Daniel, let's just say for any damage I may have done by misleading people back then, man, have I made up for it since then with what we're being able to do for people and how be able to change them and help them understand this. So that's great. Yeah. Go ahead. I'm sorry to interrupt. Keep going.
No, good. I like that there's two ways to learn things, right? You go through it by yourself, or you can learn from other people's mistakes.
Right.
And sometimes people unfortunately have to go through it themselves, but hopefully people can listen to this show and understand what we're talking about. And some people will decide whether they're a speculator or investor, and some people will put it in the back of their mind, and some people will think that we're silly, and that's okay, each of those things. But what our goal is to help the people that want to be helped.
Right. Right. And this is interesting, Daniel, because we're bringing up today's topic of, are you a speculator or investor? Because as a company, we were into speculating and we turned into investing is what we've done. And now you, in the second generation of this business, being my son, are able to learn what one of the things I've taught you and your siblings were to be able to learn from the experience of others. That's as cheaply as possible, right? And you are having to learn this. Now you can't say that for other organizations, right? Because so many times in other organizations, it's not multi-generational organizations. They haven't learned from that. And they're learning from other people who have been in before, maybe, but you know what? There's not a lot of true mentorship in investing out there. And so the average Joe, generally speaking, unless they find a needle in a haystack like us, they're going to be involved with speculators that have not learned the difference between speculating and investing. That's one of the things I want to bring out, right, Daniel, is that people's financial advisors that they have or companies that they use, right, big name companies, they don't have a financial advisor, but they got this 800 number that they can call this big name company. And those people at those companies don't even know the difference between investing and speculating. And probably, unfortunately, Dan, I hate to say this, right? But I've talked to people that have been in this business for over 20 years that don't know the difference between a bond, individual bond, and a bond fund, and how they're so much diametrically opposed to each other. And that's egregious, right? There's a lot of misinformation out there, even by the professionals. So you can't take a professional. That reminds me of, the attorney that I hired that to help me do something with real estate. And I ended up paying him $10,000 before I realized that he was the wrong guy. He was the wrong kind of attorney. And that's egregious on him that he didn't say, right? But he was just looking for the buck. And that's what a lot of people do. They're looking for the buck and they're not going to know it. So it's up to the individual to know what they don't know, right? And it's just going along those lines real quick. I mean, I'm a little on my soapbox now, but your brother DJ's writing like his fourth book and he's got this publisher and his publisher promised him the moon. But guess what? The publisher is not editing the book. DJ has to edit the book himself. He thought he was getting a publisher that was going to edit the book. Now he's got to spend all this time editing the book himself. He's got the wrong kind of publisher, right? So
yeah. And with what you just said regarding paying the attorney, $10,000 sounds like a lot of money, but what people don't realize is a lot of people are paying far more than 10. They're paying hundreds of $1,000s over periods of time because they have the wrong person helping them with their finances. They might be paying $10,000 a year in extra fees. They might have missed out on $50,000 of opportunities. That's a small number when we're talking about a retirement portfolio over a few years. And then if you talk about a couple decades, you're really talking about huge numbers that people are losing.
Right. I mean, it's what they've said. You think education expensive, try ignorance. Right. And that's the idea there, right? I mean, my ignorance cost me 10 grand in that example, but I learned from it, right? And I turned my around and I found the right attorney. But unfortunately, so many people listening to this, they're paying speculators tons of money per year when they want to be an investor, and they can be an investor for less money, but they don't know it because people don't know what they don't know. And glad that you joined us today. You're listening to Financial Strategies with Andrew and Daniel Agemy. This father and son team's trying to bring to you today the topic of, are you a speculator or investor? And we have a paper that we'd love to give to you today to be able to help you, in this process of understanding how to invest and how you should be investing, especially when it's coming to the concept and the idea of retirement and how to be able to retire and stay retired. We have this paper called The Case for Fixed Income. A lot of people think fixed income is crazy. It's not worth anything. But those are people that don't know what they don't know, or they've been they're infused with the Wall Street cancer that makes people think that Wall Street is the only way to invest. So we'd love to put this in your hand to give you, if you're open, if you have eyes to see and ears to hear, something that's a little bit different, a different perspective of retirement income. We'd love to put this in your hands. It's called The Case for Fixed Income. Ask for it by name, Fixed Income Paper. Call us at 800-725-7616 for your free copy. 800-725-7616. Call now. Daniel, moving on, right? We still got a lot more to go with this speculator or investor aspect. I was talking about the idea that your financial advisor needs to know which it is. And if they don't know the difference between investing and speculating, you're in trouble.
Right. Right. And that's a difficult thing. I'm going to go back to something you said earlier. You were talking about there's not a lot of mentors in this business. And there's a lot of good mentors in this business. But do you know where those people are? Those people are in hedge funds, and those are people that manage hundreds of $1 million or $1 billion portfolios. And then they will mentor someone, and then they'll go start their own firm. But you'll have to be in those brackets to get those people. So I found that very interesting what you said about that, because it is happening, but it's up on this really high level that you have to be to access those people. And they tell stories. They all know their mentors, and there'll be a whole group of guys that manage this type of investment now. And they all had one mentor who all trained them to be successful. Now they all have their shops that they're trained. But it's not a financial advisor. It's not somebody that works at one of these big brokerage companies. It's not somebody that you call an 800 number and you talk to, right?
Right.
So
they're not for the average American citizen, right? And we're talking to the average American citizen today. Well, that's a real important thing for people in our listening audience to understand this, because, different people make money in different ways in this business. And there's a lot of people out there that make money, a lot of money from a few people. But that's not what we do. We work with a ton of people and make a little bit with each one to be able to add up to the whole. So so we can help more people to be able to get what they want to get.
Yeah. So there's not a problem with being either of these. The important thing is that you know what you are and that your funds are set up to
match it.
So if you're a speculator, especially if you're a speculator and you know what that means and you have a competitive advantage, and that's what your risk your internal risk matrix allows you to be there, then that's fine. The difficulty is a lot of people get into speculation, or someone will put them into speculation. And as long as everything in the world is fine, it's fine. But the difficulty comes, and we've seen this. The difficulty comes when COVID happens. A great financial crisis happens, and the people are terrified because they're not speculators and they're set up for it. So they sell at the bottom. And once you sell at the bottom, it's unrecoverable, basically.
Right.
Maybe over time you can still recover, but usually they put it in cash and then they'll leave it there until the next speculation phase. And then they'll finally build up confidence and be like, okay, I can be an investor again. And it's at the top of another thing, and they'll lose again. And with your story about Ralph, I think that maybe had happened to him a couple of times. Maybe one was enough, but he said, no more. I'm not doing that.
Right.
I'm done with the speculation. I'm not going to try to time this. I'm not going to try to do anything. I want to put my money somewhere where it's going to pay me. I know I can collect X amount of money a year, $70,000, $60,000 a year off of my investments. The principal is protected and I will be paid. And that's what a lot of people. So if you like how that sounds versus you're trying to do like you do in traffic, right? Where people try to do, you see a lot of people lose in traffic. If anyone sat in traffic and they watch the lines next to them, and you see the weavers, you see the people trying to pop in back and forth lanes, and you sit in your lane, typically you beat those weavers. Now, there might be a couple of those guys that are getting ahead, but typically they get further behind, and you get off the exit at the end and they're behind you, and you're like, they were jumping back and forth all that time and I was ahead of them, right? So that's like the investor versus the speculator. You pick the path, you have a strategy, you follow that strategy, and you're not just trying to get in the thing that's moving fast, because it almost certainly is going to. Some people succeed in that, and those are the speculators. And if you want to be that and you know that, you just have to pick. And you're the only one, listening audience, you're the only one that can choose if you're a speculator or investor.
Right.
Nobody can pick for you. Yeah. You have to. Now, you can get help doing those once you choose what you are, but you need to pick.
Right.
Am I someone that wants to get paid? I want my capital to be earning some type of reasonable interest, some type of reasonable gains for me, or I want to try to jump in and out and see if I can beat the market, if I can beat the investor.
Right.
Some people divide it up and they have a small spot for speculation and most of the majority of their money in as an investor. That's what we see a lot of people who are in retirement or close to retirement do. But it's really up to each person. And that's what our next segment is going to be. It's going to be about self-assessment. And that will be what we talk about in our next segment.
Right. Okay, good. Cool. Sounds great. Are you an aggressive person when it comes to your money and your retirement? Are you conservative or you're moderate? And so you listen to Financial Strategies with Andrew and Daniel Agemy. Today's topic is, are you a speculator or are you an investor? And we have a book that we want to give you before we go to break today. And this book is by Anthony Saccaro called More Life Than Money, How to Not Outlive Your Life Savings. And we'd love to put this in your hand. It's a great, easy read book that will be a bestseller on Amazon and will be good to be able to help you understand more of what you don't know. And you can have that for free by calling us at 800-725-7616. If you're a client, please, we'd love to put this in your hand to educate you further. If you're a radio listener, for the first 5 first-time callers, 800-725-7616. Call now.
Strategy with Andrew and Daniel Agemy.
So, Daniel, many times people will come in for a free second opinion or financial MRI on their finances, right? And so many times, one of the questions I ask is, are you a conservative investor or are you an aggressive investor? And so many times people in or close to retirement, right? You've heard it. You've been in those meetings where they say, well, I'm conservative compared to what I used to be. I'm conservative. Or maybe they say, oh, I'm moderate, right? Then I say to them, okay, what percentage of your money do you think should be at risk to where you can lose a good amount? What percent of your money? And many times they'll say, especially if they say that they're a conservative investor, they'll say, oh, maybe 10%, 0 or 10%. And then I look at their investments and I see that, and I say to them, well, actually, when I look at your investments, if you're looking at all investments that are out there, you have 90% that's aggressive and 10% that's safe. You're just reverse of what you want it to be. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. And today we're trying to help people understand if they are an investor or they're a speculator. And are their funds following the way that their internal compass is?
Right.
AAA, that's a good story. We see people off all the time. And you have another story, which I don't know if we have time to get into it, about why people become advisors because they're aggressive. So if they have an advisor, right, they may be teaching people what they understand or their emotion as opposed to what the actual investor in this scenario is doing.
And that's what I wanted to bring out by that, right? Because they say the rest of that story is the people say, but my financial person knows I want to be conservative. And I say, yeah, that I understand that. And according to his definition of conservative, he's got you 90% in the conservative end of aggressive. But you're of aggressive investments, but you want to be in the conservative end of all investments. And so you're using the same word, but you have different meanings. It's not congruent. You need to be congruent. Your financial advisor needs to be congruent with you. Your investments need to be congruent with you as an with what you want to do with your retirement monies. If you're listening to us today, and so that's why we're bringing this up, so you can recognize if you're incongruent and get things lined up accordingly.
And that's why we're doing this show, AAA, because sometimes conservative and aggressive can be difficult to understand for everybody, and everyone has different. That's why we're using speculator and investor, and we're defining it as a speculator is hope. You're hoping that you'll be able to outperform. You're hoping you'll be able to buy things that do better than the investor. And the investor is looking at things for a long horizon that will pay them. Just like the beginning story we talked about with the land. You buy a piece of land, you buy a stock, whatever you want to call it, and you hope that it goes up. Compared to you buy the land and you have a farmer who has a contract. and the contract says, I am going to pay you this amount. Now, it can still go up in value, but it doesn't matter if it does or not because you're collecting that income, the rest. And that's how we're dividing the investor versus the speculator, where conservative and aggressive get mixed up because people automatically think if you're aggressive, you're going to make more money, but that's not the case. And that's why we're saying speculator versus investor. One has some type of promised return. In the other, you're hoping for returns.
Right.
And that's fine. If you hope for returns and you're good at getting returns, you just need to know that. But if you're not a person that wants to hope for your returns, you're not a speculator.
Right. Right. And Dan, a great example of an investor are banks, right? They loan people money for their mortgages, for their houses, and they're investing, right? And the bank has this contract, like what you're talking about, which is great because the bank knows how much money they're going to make. They know when they're going to get their money back. And if for some reason you decide not to pay them, well, they're going to ruin your credit and take your equity. So what do you do as the person that borrowed that money? Well, you do everything that you can do to make sure that you pay your mortgage because you don't want your credit ruined, and you don't want to be out on the street, and you don't want your equity taken, right? So you're motivated. So that's where we're talking about for people to be investors, to where they're doing that same kind of thing, to where the people are paying them and they're getting paid. And it's something that you don't have to hope for. I talked to one lady once. I remember I explained all these things to her, and so I said, so where do you go from here financially? What are you going to do? Oh, I'm just going to leave things the way they are. So she was in a hope setup, right? Her investments were set up for hope, and she had done well. But I said, so you're going to hope for the best and plan for the best? She said, yeah. I said, that doesn't make any sense. I mean, who hopes for the best but plans for the best? You should hope for the best and plan for the worst, right? Because in case something happens, right? And that's what happens. The greatest fear retirees have is running out of money before they run out of life. But it doesn't happen overnight. It happens slowly, and they don't realize it, right? And if you have your money set up for hope, and you might do well in your 60s, and you might do well in your 70s, but then in your 80s, especially if it's IRA money, and you're having to take out 6, 7, 8% for a required minimum distribution, and then you push into your 90s, and for somebody that gets, you have a couple that's 65 years old, the chances of one of them living into their 90s is pretty good. And the older you get, the chances of living to 100 are very good. So you could run out of money over time if your money is set up for hope. But by the time you know that, it's too late. It can be good until it's not. I'm Andrew Agemy. You're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is, are you a speculator or are you an investor? It's very important to be able to understand the difference between the two. And what we have is, if you're an investor, we have a paper that would be right up your alley. It's called The Case for Fixed Income. This will be able to help you understand, to be able to how you can know that you can retire and stay retired, how you can be able to have your cake and eat it too, how you can have more than enough money to live the rest of your life the way that you want to, more than enough income. We'd love to put this in your hand, A Case for Fixed Income, for free, no obligation, by calling us at 800-725-7616, 800-725-7616. Call now. Daniel, as we just had a little bit more, and you promised that we're going to talk about I believe you promised that you're going to talk about self-assessment stuff a little bit.
Yeah, self-assessment questions. So we actually did a show called Investing Your Way, which is available on our YouTube channel. It's available on wherever you listen to podcasts. You can hit our website, agemy.com, agemy.com, and check out other episodes that we've done, other radio shows that have already aired. And this Investing Your Way is all about these self-assessment questions. But we'll go through a few of them right now. We're not going to go through them in depth. Go listen to that show if you want to have them in depth. Right. Some of these self-assessment questions to understand if you are an investor or a speculator are things like, what's your primary goal when putting your money in the market or when you're investing your money? Are you trying to generate steady income? Are you trying to grow your wealth over the long term? Or are you trying to just make quick profits on market movements, right? I think a funny thing is, back to George's story, to help people understand how financial media, these big financial news organizations,
entertainment companies. Uh-huh.
Yeah, when this whole short squeeze with GameStop was going on, and every day it seemed like GameStop was going up hundreds of percent, and they were saying there's hundreds of thousands of investors getting into GameStop, right? And they missed it. They're not investors. Those are not. No one was buying that stock as an investment. They were jumping in that stock to try to get a short-term move. They were speculating that they could make more than the next guy. And a lot of them lost money. There's a whole movie about it, and they don't show all the people that were devastated by losing so much money. I know people who got in at the very top. They had the FOMO and they just finally said, okay, I have to get in, and they got in at the top, right? So that will show you, George's story, how these financial media companies, they don't understand themselves the difference between an investor and a speculator. And that's why you have to be very careful when you're listening to them, because if you're jumping into a stock like GameStop, that's not an investment. Now, again, we talked about you can have money split up into different buckets if you like some speculation, but a lot of the people we work with and we talk to, they don't want any money in the speculation bucket. Some do, but a lot of them don't.
Right. And Daniel, we have several clients, right, that they sit their money up as for investments with us. And then they say, but I want my own play account where I can buy and sell stuff according to what I want to do. And they limit themselves to that. Right, to that, whatever that amount is. And that's what they do. And sometimes we see them making money, and sometimes we see them losing money. Right. And, I'm thinking of that one guy that we have, right? He bought that one big stock that keeps going up, but then all the other things that he buys is junk, and he loses money on all the other actions he does. He made one good decision and he's making money, and he thinks he's got more decisions. So it's kind of like going to the casino, right? There's a lot of people who go to casino. They say, I'm going to limit, I've got $100, and when my $100 is spent, I'm going home, right?
Yeah.
And so that's the idea of speculation, right? Or the lottery, right? Where people are buying lottery tickets hoping to make something, right? But how many people do it? You can buy a ton of lottery tickets, and you're more likely to get something if you buy a ton of lottery tickets. And it's going to take literally a ton of lottery tickets, right? But it's still speculation. So I'm sorry. I want to throw that in.
Yeah. So we'll do some of these 5 assessment questions, and you could write down the answer. There's a multiple choice questions. I'm not going to give the multiple choice. You can listen to that other show and get it, but write down the answers. Write down the answers to the questions. And if you think you're an investor as opposed to a speculator when you're done with these 5 questions, give us a call, and we can tell you based on your answers if you're an investor or you're a speculator if you don't know from doing it. And if you want help with investments, call. But write down these 1 through 5 and answer them if you feel like it. So the first one is, what is your primary goal when you put money in the market or invest money? Number 2, how often do you check your investment performance? And do you like to receive your performance, or do you like to see your account go up?
Which do you like? Right.
What is your typical holding period for investments? So are you holding it for days, months, years, decades? What do you like to do with your
buying
holdings?
and holding, or are you just looking to flip it around?
Yeah.
Right.
How do you react in market volatility? So if you've been around through COVID, if you've been around through these different things and you were panicking, but now you're okay, write that down. How have you reacted? Great financial crisis, if you were investing, COVID scenario, right? Things like that. How have you reacted? Or just a bad day. S&P's down 5%, S&P's down 30% over a month. Like, does it bother you?
Well, and what I want to throw in there is, it's one thing, the great financial crisis was over 15 years ago. So today you might react. What would happen? How would you feel today with the great financial crisis, or with what happened in 2008, right? Back then, that may not have been a big deal to a lot of people, but today, if that happened, that could be a different deal. So you need to look at that.
And then we'll do this last one. What's more important to you in an investment? That you can collect dividends, that it grows steady over time, or that you see rapid price appreciation?
Right. Good. That's excellent. Well, I see that we're running out of time real fast. It's been a fun show. And like Daniel says, you might want to pick up the rest of that in investing, watching, listening to Investing Your Way. You've been listening to Financial Strategies with Andrew and Daniel Agemy, this father-son team coming to you to be able to talk to you today about, are you a speculator or investor? And we want to be able to put a book in your hand to help you be able to understand investing more thoroughly so that you can retire and stay retired. Our friend Anthony Sicaro wrote this book, More Life Than Money. We love to put that in your hand. It's an Amazon bestseller, and you can have that for free by calling us at 800-725-7616, 800-725-7616. And if you're a client, please call. We'd love to give you a book. If you're a radio listener, the first 5 first-time callers, 800-725-7616. Well, listen, we look forward to listening to you and catching up with you next time on Financial Strategies with Andrew and Daniel Agemy. And until that time, we're looking forward to helping you to retire and stay retired.